So regardless if you're looking at a balance sheet for accounting purposes or because you're an investor doing due diligence, the first thing that you will see on a balance sheet is assets. And assets are split into two categories: current assets and non-current assets. And today we're going to talk about everything you need to know about current assets, which is actually used in other ratios in fundamental analysis, like quick ratio and current ratio, which we'll cover in a later video. So what exactly is a current asset? Well, we know that an asset is something that a company owns, but a current asset is something that a company is expecting to convert into cash within 1 year's time. So there's different types of current assets. Let's cover what they are. So the first one is cash. That's obvious. Cash is the most liquid asset you can have. And oftentimes on the current assets, you will see an itemized list of current assets. And it goes in the order of most liquid to least liquid. And that's why cash, checking and savings account, probably going to be the first thing you'll see in current assets. Now, checking and savings account makes a lot of sense. I'll use my business as an example. So I do 3D printing, I do web design, and I also do photography, videography. The money that I make from it, I put in checking or savings, and I could use that money in the business to fund operating expenses or to go ahead and pay off a debt. It is readily available because it's a very liquid asset. The second thing that you'll often find right below cash and cash equivalents is accounts receivable. So what exactly is accounts receivable? Well, they're funds that customers owe the company for products or services that have already been invoiced. It's basically work performed on credit that you're waiting to get paid for. Now, the next item you're often going to see under current assets is inventory. And that's basically just raw materials and finished goods. I'm going to use the 3D printing aspect of my business in order to explain this one. So for many years now, I've been 3D printing for a lot of the local pediatric departments in hospitals. And let's say I have an inventory with 10 of these 3D printed spines sitting there, and I have a long history of selling 20, 30 spines, and so I know that I'm going to get rid of this inventory. This is something that I can count as finished goods. Also raw materials. And an example of raw materials is if I have a lot of cartridges laying around, then I'm going to be using this year for 3D printed material. So for instance, when you 3D print, you usually have plastic that melts and then extrudes out. You could think of it as a really large cartridge that's going to turn into finished 3D prints like this. That would be something that you could consider raw material. And now, depending on the company, there's going to be a plethora of other types of current assets. There might be marketable securities. This is something that's like liquid financial instruments like stocks or bonds that you could purchase on a stock exchange or bond exchange. And you might ask yourself, well, why is a business buying stocks and bonds? Well, imagine this. Let's say I had a good year and I made $200,000 in revenue and my margins were huge. So I have $60,000 sitting in a bank account just from that year in profit. So instead of it just sitting there and getting a little bit of interest that the bank is paying me for having it in the savings bank account, and I think that I can make much more by putting it into the S&P 500 or buying bonds because I think there's going to be great returns. Or maybe it's March of pandemic when we saw that huge sell-off, and I think that my money is better off being invested in something that I could turn into cash really quickly, but in the meantime will return more than the interest that my bank is paying me. Then I go ahead and I purchase bonds or stocks, and that's considered marketable securities. So to explain it super simply, a current asset represents a company's liquid assets. A company can have a lot of assets, but how much can quickly be converted into cash in order to pay off short-term debt, in order to pay off bills, and to fund immediate or current needs and ongoing operating expenses. For example, I have to pay people. If I have payroll that I have to pay certain employees or freelancers, this is where peeking at current assets can be really important because it gives you an insight into the company, whether they can handle their short-term obligation. Now, as with everything else, and there's a lot of way to cook the books, I might make a separate video with a lot of the ways that accountants tend to manipulate and do accounting jujitsu on the books. But for the purpose of this video, I want to mention two things: that in order to really see the true liquidity of a company, you have to always examine current assets with scrutiny and understand the business model, because you have to understand, is the inventory that they're listing really expected to be converted into cash, as they say? So for instance, the business landscape, supply and demand, supply chain issues, this might all affect what is coming down the pipeline. And will the company actually have all the inventory that they listed under current assets be converted into cash within a year? It's questionable. The other thing is, we talked about accounts receivables. Every single business, they don't really collect on 100% of their invoices. They would have to be very, very lucky for that to happen. Also, there are some scumbag clients that will just stiff you, or some clients will go out of business. Some customers just might go completely bankrupt and not be able to pay you. And so way overdue invoices, or invoices that aren't going to be paid, is something you have to take into account. So personally, when I look at accounts receivable, I might take only 85% or 90% of that into account and leave the other 10% as maybe they won't receive it, or they're beefing up the books, or something like that. So with that being said, let me show you where to find current assets if you're looking on the balance sheet of any publicly traded company. Okay, so we're going to take a look at Ford, courtesy of Yahoo Finance. Remember, they have income statements, balance sheets, and cash flows for every single publicly traded company. And please be mindful if you're looking at the annual or the quarterly. And remember, the balance sheet, it is just a snapshot in time of what the situation is with the books as far as assets, liabilities, and shareholders' equity. And also remember that the income statement, that's over a given period of time, usually a quarter or annual. So let's go ahead and take a look. What we see here under balance sheet is total assets. And you can always click this drop down menu, and you will typically see total assets broken down into two categories: current assets and total non-current assets. For the purpose of this video, we're going to cover current assets. So if we click the drop down menu, we see that Ford over here, cash equivalent, and short-term investments totals $49,593 million. Now I know what you're thinking, this says 49 million. It does, but it's actually, all the numbers are in thousands. So always bear that in mind. You have to look at the fine print. So cash equivalent, and short-term investments is $49,593 million. This is, according to Ford, their most liquid asset, which makes sense. It's cash and cash equivalent. The next most liquid asset that they list is receivables. Now, what is accounts receivable? Well, maybe people purchased a lot of cars, but they purchased it on credit. Maybe the partners of Ford purchased certain things from Ford on credit. This is work or services done that's been completed and sold and invoiced for, and now they're waiting to receive these invoices. But always take this number with a grain of salt. As I mentioned in the video, not all of these receivables are going to be paid, because in real life, no huge company actually collects on 100% of their receivables. That would be very, very rare, because remember, people go bankrupt, companies go bankrupt, sometimes there's scumbags, sometimes there's lawsuits, crazy things happen. So always take this with a grain of salt. Now, if we take a look at inventory is split up into two sections here. There's finished goods, which is probably a lot of the cars, and then there's raw materials that are used for building out the vehicles. And then the last category is other current assets, and that amounts to $3,425 million. And if we take all of these things under current assets and we tally them up, it will equal $108,996 million. And if we take current assets and add total non-current assets, this is when we will get total assets figure, which is $257,035 million. Now with current assets, which I'm going to cover in a different video, we could do a few things. We could see how current assets is changing over time. We can also compare current assets, what the company owns that's very, very liquid, to current liabilities, what the company owes in the short term. And we can actually take current assets divided by current liabilities in order to get current ratio. But again, I'll cover all that in a different video and the various ways that we can use current assets. So hopefully you found this video to be helpful. If you did, Please do me a favor, like the video, subscribe, leave a comment, tell your friends about me, and keep learning fundamental analysis, due diligence.